So let's look at the gold view for the week. I'll be showing you my entire model and how you'll be able to position yourself to make money with gold this way. So let's dive right in. So we can see that gold has been in an uptrend. If I go back to the weekly, let me show what the weekly candle looks like. And you can see gold has been making highs, lows, highs, lows, highs, lows, highs, and a little bit of lows here. Alright, so what exactly are we anticipating for the week? Today is Monday. I'll come back to the daily, and the daily, you can see gold is already giving us bullish sign since market opened a few hours ago. But then we already have our directional bias, and which is clear. We can see that gold is most likely coming for this high. Okay, so most likely buy into the zone and break higher and even continue rallying higher, because you can see gold is also at the same time maintaining this trend. Okay, so it clearly shows us that gold is in an uptrend. I'll take this out so I don't cluster my chart so much. This is a key level I'm looking at. So we come down to the 4 hours time frame, and yep. So what exactly is happening? If you notice here, you would see that throughout the whole of last week, gold has been in a range. Ever since market dropped, gold has been in a range. So this is the range here. You can see this is Monday. This is the Monday, the 11th of August, down to Friday. So you can see I call this range the death range. Okay, because there's a lot of choppy price action, and yep, it is what it is. If you try to play the long game to this point, gold probably took you out. So now gold tapped into this breaker, here. That was last week. Tapped into it Tuesday last week, and we saw some rally high into it. And by default, since market opened this week, gold had to sweep out all of that low. So this sweep here is more valid compared to the sweep here. Alright, so we are still maintaining the breaker zone though. So if we see this, see gold did not take that out. So if you are a swing trader with a wide stops, you are still in this trade. But if you are like me and you have your stops very small from the 15 minutes time frame, you're probably out of the market. Now let's what are we looking for exactly? So we are looking for how we'll be able to enter into this buy, okay, down to the stop. So what am I going to look out for next? But gold has already tapped into a key level, which is amazing, and that happened some hours ago. Key level, okay, so there's a key level on the 4 hours time frame. Okay, there's a key level on 4 hours time frame, and we notice what happened. Let me take this out. So immediately gold swept this low, a buck structure here, do you see that gold buck structure there? And that's interesting to note because it shows us that there's a market structure shift, and because we've tapped into a key level and we've broken structure on the higher time frame, now all I have to do is to scale down to the lower time frame. Also note that gold has stylishly created liquidity here, all over this level. The liquidity here, okay? But then we're not carried away because we understand what has formed there. Gold tapped into a key level, and we are having some sort of retracement to an order block. Okay, so there's a lot of liquidity to be taken out right now. This is a trend line liquidity already, so the valid buy is what we'll try and position for. So what's the next thing I will do? I've noticed that gold has created liquidity to be taken out, and the next thing is I'll scale down to the 15 minutes time frame. I scale down to the 15 minutes time frame. You will notice that this is the break of structure we identified. Remember that this is the break of structure we identified, and for me, my model is simple here. I always want to see price, sweep a major area on the higher time frame. So this low got taken out, and what low is this? This low was formed on Tuesday and got swept by a Monday market open, and that's it here. And what's the next thing? So there are two entries I'm currently looking at here. So since we have a break of structure here, this is likely an inducement liquidity. So we're on the 15 minutes time frame. This is an inducement liquidity. I'll do that. I'll just label that IDM. That's inducement liquidity. And what else? This is our break of structure. Yeah. BOS. So we have an idea of what's about to happen on the higher time frame. You can see market keeps making this high, there's a low, there's a high, does not take out this high, there's a low, and there's a high, does not take out this high, there's a low, there's a high, does not take out this high, have a low, we'll have a high, does not take out this high, and we'll have another low. This is the lowest low so far. But then what do we notice? This low got taken out, and then got taken out, and then got taken out. You can see all of the liquidity here is gone. So this shows us that this BOS is not just a BOS, but there's a market structure shift. Okay. So because we have a market structure shift, we have an inducement. Now our POI needs to be below our inducement. So price hasn't tapped into this POI, price hasn't tapped into this POI. But for me, I'll prefer to take this POI, the whole of this area, is my first entry. Okay. Yep. So this whole POI as my first entry, and my target will be here. My target will be this high. Let's clear the liquidity on this high first. Okay, so if I do my maths properly, we would have this somewhere here. Close that. Okay. Yep. And our target will be here. Good. And that gives us a 1:7 next to it. This is perfect, but we can scale down and try to refine even further and see how can bounce more profit. This is way one. For my optimal refinement model, I would usually want to take her instead, but that's me. I'll take this instead. That's 50% of this whole other block. And if I do that, save it. I do that, that's this. And the disadvantage of that is that you might miss entries. So if you're okay with me, like me missing entries, then that's no big deal. So come back to for 5 minutes time frame. Bring this down. Distance from 1:8 to 1:13. Okay, so this is my first point of interest. I'm just gonna go back. Let's take the most convenient one. Okay, so that is it. So observe that area, and the next entry I'll be looking at, peradventure this field. The next point of interest I'll be looking at will be this. And remember, this was the previous low for Thursday, and this is OTE for me. This is the previous low, Tuesday, got swept by Thursday, and then Thursday low got swept by Monday. So I'll be taking the whole of this area as my point of interest. The whole of this area, which is an order block that failed, as my point of interest. Second point of interest. Yep. So I have this here, and I'm looking at peradventure price decide to disrespect this zone. The next one that I feel price should come into is this. For me, this is an optimal trade entry model, but it's okay to take up to this point, okay, so that you don't miss any entry. So we can extend further, and if there's a likelihood that price comes down to this point, this is a continuation model and this is a reversal model. So because this is QMR quasi model reversal, QMR, okay, that's QMR, and yep. So we have the price will, if price definitely comes in, observe price action, and this will be a good buy here. Okay, this will be a good buy here. Yeah, so that's it. And I'll go back to the 4-hour time frame, and if there's a likelihood that price comes here, my target will not just be here, okay, which is 1:10. My target will be here for 1:19. You can further refine this, and you can see the line in between, which is my optimal trade entry. If I further refine it, okay, and I decide that I'm not gonna take I want to use here instead, that'll be 3331 3331.3 yeah, so it will be 1:51 instead of 1:, what's that, instead of 1:19. So yes, that's it. So that's how I refine my trades, okay. So in my mind, because of I have the skill level as an idea in mind, I already know that if price taps into here and comes lower, this is my first entry, okay. This is my first entry here. I also have an idea that I'm going to take a second entry, but that I don't add to the chart, or that I don't tell anyone, and that's why I have that significant OTE there. So in case price taps into this next level, and I'm going to take this, I'm going to take this, and if it fails, it fails. Most likely this is how I reach 60% on this first entry, and I reach 40% on the second entry. So if I intend to reach 1% on my account and I see this opportunity, I'm going to reach 60% of my 1%, which is 0.6%, and then 40% RX head. So if I'm meant to take one lot on gold, I'm going to do 0.6 lots here and 0.4 lots here. And at the end of the day, my target here will give me more than what I have here. So this is it. Basically, this is my review for what I speculate that gold is going to do for the week. Yeah, we'll have a lot of upside and downside, but this is like a larger overview of what I'm looking at. Okay, so that's it. I hope you liked the session, and if you would like me to, do some more market analysis like this in the coming days, do well to drop in the comments. If you have any questions about how I pick my entries and all of that, you can also drop your questions in the comments. You can also do well to follow me on X. My account on X is DexChat, so you can do well to follow DexChat. And I drop a lot of alpha, and I talk a lot about trading, and I help people to break out from trading. And everything that I do, I've shared here. How I place my trades, how I take my trades. If you go to my world of search here, you'll definitely see everything. Okay. Yeah, do give a follow. Ask your questions, send me a DM. I would love to want to help. Thank you, and see you in the next episode.